Mona, please grab a seat. So we're going to be talking about the intersection of e-commerce and fintech. And maybe I can just start with asking you a very general question, which is, how integrated are they at the moment? We obviously had a session just now talking about how some payment methods like buy now, pay later are becoming more prevalent. But overall, in your view, as someone who's been looking at this space for a while, how integrated are they, and how much more integrated can they get?
So I'll start by saying we're at the tip of the iceberg. The collaboration...
That sounds a bit ominous.
Yeah, the collaboration between fintech and e-commerce has evolved quite significantly, I would say, over the past 2 to 3 years. And over the last year, we've seen some significant evolutions and changes. So trends that have started, we expect to completely change the ecosystem and the landscape probably within the next 5 years.
So give me a sense of those changes in the last 2 years.
So there's probably 7 to 8 trends that we've seen evolved, particularly in the last 2 to 3 years. I'll start with the obvious one, and that is the seamless checkout of an e-commerce website. 5 years ago, when a customer would come on an e-commerce website, the process from logging onto the website to checking out was fairly arduous. It involved several steps. It involved opening several pages. And the result, by the time you get to checkout, is high bounce rates, low conversion, and a customer who thinks twice. Now, what fintech has done over the last few years especially is remove and reduce as many of the friction points as possible. And some examples, you've been talking about them for the past couple of days. One-click checkout, for example, is very important. You see...
Well, Amazon patented that a long time ago.
Sure.
So why did it take so long to catch on elsewhere?
Yeah.
Is it because of that patent?
I mean, I think that's another 30-minute panel debate in and of itself. But yeah, it took a long time, and I'd say today, not all websites have that one-click checkout. You also have the rise of digital wallets like the Google Pay and the Apple Pay that have also made the process a lot more seamless, buy now, pay later. So what's happening right now is because of these invisible integrations within checkout, making it much more seamless, customers are converting more. They're bouncing less, and impulse purchases, we've seen a significant rise of impulse purchases. So that's the first trend. The second trend, and one that was a big pain point in the past, is cross-border transactions. Now, what fintech has done very importantly is it has opened a global stage for e-commerce players, particularly the smaller SME e-commerce players. Now, remember, the barriers to transacting globally traditionally were very high, from currency exchanges, currency rates, setting up local offices, the governance, the jurisdiction, et cetera. Now, what fintech has done is it has reduced a lot of these barriers. It's streamlined the processes, it's streamlined remittances, it's lowered currency fees, et cetera. So you're going to see a lot more smaller e-commerce players entering the global stage much faster. A third trend that we've seen is personalization that actually fintech has enabled. Now, with the rise of AI, and you talked earlier about open banking, there's a plethora of data that's out there that's making it very, very easy for e-commerce players to really become hyper-personalized when it comes to not only the types of products, consumer products that the customer sees, but more importantly, the financial products that the customer sees. So we're going to see a rise. We've already started seeing a rise of variable pricing, depending on the customer, loans, subscription plans, loyalty programs. Again, all of this is hyper-personalized to the customer's requirements.
Can I stop you on that just a moment? So, like the variable pricing with tiers, that's obviously becoming quite popular. Netflix and all sorts of subscription services, as you say. Is there a world in which we could get sort of differential pricing which is sort of, we already sort of have it in some, well, when we catch an Uber with surge pricing, right? But there has been sometimes even regulatory backlash against that, even though it is the sort of economically efficient thing to do. The people who are willing to pay more could pay more. Sure. It's like instant auction style thing. Do you see the world going in that direction, or are there too many regulatory hurdles for anti-discrimination, anti-price discrimination regulations and so on?
Sure. So we're already seeing variable pricing, and it doesn't necessarily mean varying your price based on what you can afford and what I can afford. You can have variable pricing based on what the ecosystem evolution, so what your competitor is doing next door, or seasonality, for example. You can even have variable pricing based on the risk assessment of the customer. So for example...
well, loans are very sometimes, right?
Yes. I mean, as an example, I may be a customer that has a track record on a particular website. They know my data. By the time I get to the checkout and I'm buying a high-ticket item, I could get a financial product pushed to me that's allowing me different payment options, variability in that, etc. So all of that, again, comes back to hyper-personalization depending on who you are as a customer and what your sensitivities are.
Sure. You are number 3, so number 4 now.
Sure. I will say, though, I will answer you also slightly different about regulations. Now, with the evolution or the revolution of fintech, and particularly its relationship with e-commerce, the reality is the revolution is happening much, much faster than regulatory frameworks. So regulation is actually catching up. And so we're going, and this is why in a lot of instances we find that we have our hands, tapped, you're not allowed to do this or you are allowed to do this. So we are still in this ecosystem that's evolving super fast, and regulation is still catching up. Right. The other one is embedded finance, and this was a very interesting session earlier. Now, what embedded finance is, again, is it's about how can I, as an e-commerce player and as fintech, provide my customers financial offerings that are invisible and that are catered to their specific requirements, such as loans, such as insurance, etc. So we're going to see a lot more of that. Another one, as fintech, open banking, data accessibility increases and e-commerce continues to rise at record speed, the need for fraud detection and consumer protection is absolutely imperative. So what we're seeing more and more of are different ways to detect fraud. So for example, we're seeing face recognition solutions coming to play, fingerprinting coming to play, even voice authentication and tokenization. So as that happens, because again, if you look 10 years ago, customers 10 years ago were not comfortable putting their credit card online because they were afraid of fraud. Now what customers are worried of is not putting your credit card online, it's rather how much data is this e-commerce player gathering? How much do they know about me? To be able to offer me such solutions that are hyper-personalized, you begin to worry. And
I mean, do consumers really worry about that? I mean, my sense is that when you look at the revealed preference of most consumers around the world about their data, there are a few data obsessives out there, to be sure. A lot of them sit in Brussels, apparently. Most people, despite all the sort of bad news that's come out about Facebook and over the years, people are still using Facebook, people are still using Instagram, people are still using Google. They don't seem all that concerned about their data if, in exchange, they can get a lot of convenience.
Yes and no. Consumers today are given a lot more transparency over what data is being shared. So I can go on to to Facebook, and I can click on 6 buttons that says, you're not allowed to share my data, you're not allowed to tell others that I'm looking at them. This didn't exist a few years ago. So we are evolving. As data comes out there, more and more consumers, and remember, a lot of consumers are not aware of what's being shared. You know, when you're driving down, you know, the Bahrain Corniche in front of, you know, a toy shop, and you get a push notification that says, hey, Muna, would you like to buy a Lego? You're going to be alarmed because you know that someone actually knows that you're in front. So you are, yeah. So at this point, not all customers know what information is shared and what they are empowered to control or not to control. And that is, again, evolving. Last thing I will share, and this is very, very interesting, and I find this something that we're going to see a lot of, is green fintech, which is very exciting, and we're literally just starting that. So what green fintech is about, it's about allowing the customer to control, to some extent, the carbon footprint of their purchases. So you have some companies, for example, already starting that allow the customer to pay a slight premium in order for them to reduce the carbon footprint of their purchase with their delivery, for instance. You have other companies thinking of offering at the checkout eco-friendly investments. If you want to invest in a particular type of product that allows you to, again, contribute to the environment, you can. And last but certainly not least, I've already seen this happening with, you have loyalty programs that are also pushed at the checkout that encourage customers to buy eco-friendly, and they earn more loyalty points. So that's also something that's going to evolve in the next few years.
So that third one I can see being taken up because, you know, people get something in return except for salving their conscience. What's been the uptake on the first 2 of the 3 that you just mentioned? So like in return for loyalty points, sure, you're getting something for something. And the other 2, it does seem to be sort of a little bit of charity. So are people that charitable?
So look, it's early days. Again, I'll give you an example. We had, we were, I would say, probably ahead of our time at Mumzworld, where every box that we had, we pasted on the actual box as well as inside the box a message for customers for us to pick their box up upon delivery of their next purchase. And the reality is, you know, habits take time to formulate. We also had at the checkout, if you want to get a recycled box, just click here as opposed to a new box. So there's all this also a friction around whose box am I getting? Is it going to be clean? Is it going to be dirty? So it's an evolution. It's early days, but once that tipping point is reached, we're going to see a lot more. Once consumers are more aware, we're going to see a lot more of that.
So let's assume that we meet back here at Fintech Forward 2030. And we're having the same conversation. Well, not the same conversation, but you'll be younger, I'll be older. So how will the world look different?
Sure. So let me paraphrase this from the e-commerce customers' expectations and how we operate as human beings and as consumers. We have entered this world because of the extent of not only data access, but also data sharing, data volume, assimilation of the data, the usage of the data, and AI kind of putting everything together. The world has changed. That means that as a customer, I am looking for convenience. I'm looking for immediate gratification. I'm looking for entities and products to know what I want even before I know what I want, and to guide me and to offer me a hyper-personalized experience because I'm very different than you are. And so that includes going on to an e-commerce website, having all the products that I need in front of me and nothing that I don't need, financial offerings that cater to my requirements and that allow me to kind of manage my life in a faster, easier, more seamless fashion. So the reality is we're moving into a world that is simpler in a way, but perhaps more intrusive in another way, because you need to have entities.
Well, it's simpler on the surface. It's
Yes.
much more complicated underneath.
Yeah, for the consumer it's simpler,
Yeah.
but for the service providers and everything underneath, that's much more intrusive. And at the core of all of this is AI.
So how quickly will I mean, so you say that by 2030 we may be there. Do you think it might be faster than that? What's your sense of just how quickly we could get to that perfect world where, again, the thing that, you know, I see everything I need and nothing I don't need it seems incredibly enticing and compelling. So how quickly do you think that will happen? I mean,
so look, you know, I launched Mumzworld 12 years ago, and when I launched Mumzworld, the payment options that were online were payment gateways. There was one payment gateway in the region, that was a hit or miss. It worked sometimes, it didn't work other times, so there were no options. Customers did not want to use credit cards to pay online because they were worried about security. Cash on delivery.
And not that many had credit cards.
And not that many had credit cards, and some markets more than others, certainly. Cash on delivery was prevalent, which has a whole host of challenges, both for the customer and for the supplier. When you have cash on delivery orders, you have a lot of bounce, a lot of fraud, a lot of wasted supply chain, a lot of e-commerce players going out of business. I mean, that's an issue in and of itself. And you had your traditional PayPal that not every e-commerce player could actually afford because of the fees. So very, very basic. And really only in the last 3 to 4 years have we seen this drastic revolution and this shift in landscape. In the region particularly, faster globally. So the long and short answer to your question is it took us 12 years to go from cash on delivery to today. All of the trends that I just shared with you have already started. So and as you know, with revolution, you know, the first 12 years is then shrunk to 6 and then shrunk to 1, and then, you know, in a month from now you have other solutions. So we're seeing new offerings put to play literally in months. So very quickly.
So are you already deploying or toying around, experimenting with AI on Mumzworld, for example?
So look, all e-commerce players with Bait, I would say Bait especially has started AI offerings a while back.
Could you just give a word of what Bait is to people who might know?
So Bait is actually the first digital player in the region. I came back to the region in 2000 to start Bait.com as one of the first entrepreneurs. Bait is the largest jobs board in the Arab world. Today, half the labor population of the Arab world is actually on Bait, with hundreds, thousands of employers connecting. Bait started using AI a few years ago, recognizing that CVs were not really very valuable, and the way AI plays through various products. So for example, if you're a consumer, a job seeker who's on Bait, particular parts of your character, your personality, your fit to that employer are all interlinked through AI. So the employer has to do a lot less work to see that that particular professional is the right fit. Whereas in the past, you had to stream through multiple CVs, multiple interviews in a long and arduous process before you lock in. So the answer is any player, whether you're e-commerce or a service provider or anything that has not started thinking about AI, needs to start super fast because of the speed at which it's growing and changing.
I mean, but presumably on Mumzworld, you also have some sort of a recommendation engine, which is obviously AI powered, because I mean, it might not be generative AI or whatever, but there's this old joke that whenever something actually starts working in real life, it's no longer artificial intelligence, it's like it's technology or some software or something.
Sure.
So presumably you're using that already.
On multiple levels. So no two customers have the same experience. If I'm a new mother, for example, tapping into the e-commerce platform, I'm going to see new mother products. I'm less price sensitive than a seasoned mother like me, for example. So the pricing, the offerings, the merchandising is very, very different. So that's on one level. Even the communication, the marketing, etc., varies. So yes, we started at Mumzworld 3-4 years ago, and that continues to evolve.
So we only have half a minute left. But do you what would you like to see on a shorter time scale, like in a year, if we were to meet here again at Future Forward, Fintech Forward 2025, how different will the world be in 12 months' time?
So what I would like to see is more power to the consumer to control how easy their life is going to be. So in other words, how much fintech offerings and enablers and e-commerce enablers do I really want? Do I really want this seamless world of options or not? And I think we will find ourselves that we will go to the extreme and then we'll probably tailor back to find that middle ground.
Well, that's a wonderful and optimistic and very sensible note to end on. Thank you so much. This has been an absolute pleasure.
Thank you very much.
I think we have a photograph. Thank you. Thank you. And thank you all for sticking around and for participating in today's events and